Hi, this is Dustin with Dustin's Dollars. Today I'm going to be talking about MicroStrategy, or now as they're called, they just rebranded to just Strategy, talking a bit about how I view the company and diving into their Bitcoin treasury operations, sort of trying to explain that a little bit, and also going to be talking about their preferred stock that they just issued, trading on the ticker STRK. Before I begin, let me remind you that I'm not a financial advisor or a financial professional of any sort. All opinions I express in this video are mine and do not represent those of any company or any other individual. I do hold a very, very small position in MicroStrategy. It is insignificant in terms of my overall portfolio, but I do want to just disclose that for you. So this video should be for entertainment purposes only, because I could be wrong about everything I say in this video, and you need to do your own research before making any investment decisions. All right, so MicroStrategy. This is a company. I'm going to be super brief, give an overview, and then dive into some of what I think are the most relevant topics to understand what the company is doing and what they're going to be focused on going forward. So they have an operating business. They sell software, business analytics or business intelligence software. I'm not going to be discussing that at all today. I'm not going to be including it in any of the discussions about the valuation, which is, very, very atypical. But that is because they have decided to focus largely on acquiring Bitcoin and making financial transactions in order to acquire more Bitcoin and effectively engineer new financial products that are Bitcoin based or Bitcoin adjacent. And they call themselves now a Bitcoin treasury company. And that is more or less their mission, and the scale of that is growing, and it is making the operating business that they have, that does actually bring in revenue and sells software to an enterprise software company. It's making that less and less significant over time, and I think in 2 or 3 or 4 years, it will be a rounding error on the overall business when you consider all the Bitcoin operations that they're doing. So I'm not going to focus on the operations of the company, the software side of the business at all today, because I just don't think it's going to be relevant in the not so distant future. It's becoming less and less relevant even today. So in terms of what they are doing as a Bitcoin company, I'm going to give just a quick overview from their most recent earnings presentation. Then I go into some stuff that I have. Talk about their, they have this new dashboard, which actually just on strategy.com, you can open it up and you can see where they are going to show this is our current market cap. This is, how much debt we currently have. And that's going to be, relevant as they issue more debt in order to acquire more Bitcoin. They're going to talk about, how many Bitcoin do they hold. And so this is basically highlighting that's their primary strategy. There's some other stuff here about their Bitcoin. They're going to have a conference, some of their software that they sell, right? I'm skipping past most of those things. But now they talk about how much Bitcoin they hold, right? They actually hold a significant amount, 471,107 Bitcoin, which is a lot. If you do the math here, let me bring up the calculator, and we can see that, 471, was it 107, I think, divided by, and there are about 20 million Bitcoin outstanding right now. I am going to just divide by the terminal amount of Bitcoin that there will ever be in the long term, which is 21 million. And so they currently hold 2.2% of all the Bitcoin that will ever be issued as of, as of when they reported these earnings. So basically last week, or more or less right now. It's possible they could have purchased some after they reported these earnings, but that's roughly where they're at. And so that is a significant amount, right, in terms of the value that is, I guess they have it here, is $46 billion worth, if you convert it into US dollars, and that's huge. And in 2024, they talk about all the transactions they did do to actually, raise money to acquire Bitcoin. They issued stock, they issued debt, and I'm going to go through some of that in a little bit in terms of what tools they have. But this is what they're focused on. So that's a major highlight for them. And then we get to the convertible stock. And so I'm going to jump over to some materials that I have in order to actually talk about some of these things. And so let me go into presentation mode. And So real quick, I guess I just, in my presentation, I'm diving into it, but I will give you the overview, right? They have basically 4 options that they have talked about in the past, and there could be even more permutations or more financial products that they come up with. But basically, the company is focused on they're leaning into the fact that their company is valued based off of Bitcoin. And that is because, their operating company is less and less relevant. And so folks are valuing MicroStrategy, the equity there, based off of their balance sheet, which is largely, comprised of Bitcoin. And so that means they are able to, when they issue bonds against MicroStrategy, the corporation, or stock against MicroStrategy, the corporation, that, MicroStrategy, the corporation, is valued off of that balance sheet that is, very, very highly correlated with Bitcoin. And so the insight that Michael Saylor has had, or somebody in his company, and that they are leaning into, is that they can issue these financial products against their company, but in essence, they get to piggyback off of Bitcoin itself in order of its volatility and its performance in order to, offer new products to the market that people aren't directly able to offer against Bitcoin itself, right? Bitcoin is not a company, so Bitcoin is not issuing bonds. Bitcoin itself is not issuing, stock. Bitcoin is just Bitcoin. And so MicroStrategy is filling this gap and becoming the bridge that is able to create these financial products. And you can listen to Michael Saylor. He's got tons and tons of content out there where he is actually describing this in his own way, probably way better than me. But he talks about it in terms of volatility and actually creating financial products that have less volatility and allows, some of that volatility to be basically passed through to the common stock. And in passing through that volatility, there's also, the returns that get passed along to the common stock. But I want to look at it from a slightly different perspective, which is a little bit more nuts and bolts in terms of, just what can they offer, and then what are the implications for MicroStrategy. And then I'll leave it up to you to really think about, what does that mean for MicroStrategy, for the common stock in the long term, in terms of what the outcomes are. So basically, the 4 tools that I'm going to go through today, they have bonds, they have stock, then they have convertible notes, or convertible bonds, and then they have the preferred stock, right? Those are the 4 things that the 4 types of transactions I believe they've actually gone through, or very plausibly could go through in the near future, in order to raise money to buy Bitcoin. For their ultimate goal, I don't know if I've stated it yet, hopefully it's obvious, is to accrue as much Bitcoin as possible per share of MicroStrategy, right? So every holder of common stock, their goal here, and maybe I could go back to the presentation real briefly just to show where they are just describing this in terms of Bitcoin yield. They define this metric somewhere in this presentation. Yeah, so they go through their KPIs here, their key performance indicators, and they say BTC yield is, I think their number 1 KPI, which is the percent change of the ratio between the Bitcoin holdings and the, assumed diluted shares outstanding, right? So basically, how much Bitcoin do they have per share of stock? And they want that to go up over time. So what tools do they have in order to actually achieve that yield? Well, number 1 is bonds, right? And this one I hope is fairly straightforward. They issue a bond, so they get to borrow money. They just purchase Bitcoin with that. And then if Bitcoin appreciates, over the lifetime of the bond, right? If it's a 5-year bond, if Bitcoin appreciates more than, what they paid on the interest over the lifetime of that bond, then the difference accrues to the common stockholders, right? And so here's a real simple example. If they borrow $100 million at 8% for 5 years, if Bitcoin is, $100,000 per Bitcoin, sorry, I'm just kind of using simplified numbers for this example, they can buy 1,000 Bitcoin. Let's say that over the course of 5 years, they pay $40 million in interest, right? So that's, 8% interest on $100 million would be $8 million per year times 5 years, $40 million in interest over that 5 years. But let's say at the end of the 5 years, Bitcoin is worth $200,000 per Bitcoin. And now that 1,000 Bitcoin that they purchased is now worth $200 million. Sorry, I didn't finish my slide here. I apologize for that. This is the least interesting slide, so I kind of glossed over it when I was putting it together. I guess I finished. I just didn't delete the last bullet point. But now they have effectively $200 million worth of Bitcoin over the course of those 5 years. They're going to have to pay back that $100 million in principal at the end of the 5 years. And then throughout the 5 years, they paid $40 million in interest. So you can envision that, in order to pay that interest, they may have sold some of that Bitcoin over time. Even if Bitcoin was flat for the first 5 years or for the first 4 years and they paid that interest and then it, just doubled right at the very end of the period, I think that they'd still accrue value to the shareholders, right, as that due to the appreciation and the final amount of Bitcoin that they have, right? So maybe at the end they wouldn't have gained, Bitcoin double, they wouldn't have captured a full, 500 Bitcoin. They would have captured maybe 400 or so, maybe 300, somewhere in that vicinity. But I'd have to go through all the math. It's not really that interesting. You can do it yourself. But the point is, there is still more appreciation over those 5 years in Bitcoin than there is in the interest that MicroStrategy has to pay. And so this is one tool that they have. It's the least interesting tool because it really doesn't do anything special to leverage their balance sheet, to leverage, their company's unique structure of being largely a company that just holds Bitcoin. And so that's why I say this is the least interesting thing that they can do. Although, because any other company could do this, right? Any company can borrow money. They can get a decent interest rate on it, buy Bitcoin. And if the appreciation on the Bitcoin over the course of that bond ends up appreciating more than the interest, then they will accrue some Bitcoin to the common stockholder. But MicroStrategy has some other tools that most companies do not have available to them because of their large Bitcoin holdings, because their focus of being a Bitcoin treasury company. So let me go on and talk about sort of the other side of the spectrum. You have bonds on one side of the spectrum, you have common stock on the other side, and in between you have preferred shares and convertible debt, convertible notes. And so common stock is all the way on the other side here. And I'm going to go through an example here and explain this. And this one is also fairly simple. MicroStrategy can sell stock and they can use the proceeds to buy Bitcoin. And, simply this is accretive, meaning they actually get a positive Bitcoin yield if the stock is trading above the current value, the current net asset value of their Bitcoin, right? So as an example, I try to grab fairly recent numbers. I think on Friday, the stock closed at about $327.5 per share. Now, the underlying Bitcoin per share is, if you use the fully diluted assumed diluted share count. Basically, if everything that's outstanding, all the convertible notes that are outstanding are in the money, they all get converted. How many shares outstanding are there in total? So if you divide that out, you can see that the actual value per share of Bitcoin that they hold is about $158.47 per share. Right, so the stock is trading well above, almost double. I guess that's more than double if I can do the math in my head real quick. Because I guess that double would be about $317 per share. So they're slightly above double the underlying Bitcoin value per share. And so if they sell the stock at $327.50 and then they buy $327.50 worth of Bitcoin, well, all of a sudden they're actually holding, they're able to ratchet up how much Bitcoin they hold per share, right? So for a concrete example, let's say they were able to, without moving the market price, sell 10 million shares, they would receive $3.275 billion for those 10 million new shares that they issued. And they would be able to buy, at, I think I did this at $97,000 per Bitcoin, $98,000 per Bitcoin, somewhere in that vicinity. They would be able to buy 33,763 Bitcoin was my calculation when I was putting together this slide. And the new Bitcoin value per share, after accounting for both the new shares that are issued, right, 10 million new shares in the denominator, but that 33,763 new Bitcoin in the numerator, their new value of that Bitcoin per share, assuming that, Bitcoin stays at 98,000 per share, or sorry, 98,000 per Bitcoin, would now be $164.13. And so basically they're getting a positive Bitcoin yield, right? That the Bitcoin value per share didn't increase because the value of Bitcoin went up. It increased because they actually now hold more Bitcoin per share, right? Because as they can even do the math here. I will open this up here, and per new share, right? If we're able to I don't know how many 0.00163 Bitcoin per share. And if you divide this out for the new shares that are being issued, they are going to grab this many Bitcoin per share. Right now, divide this by, that's how many new Bitcoin divided by 10 million new shares. They're actually accruing per new share 0.00337 Bitcoin per new share, even though the existing shares hold 0.00163. And so that, again, because effectively the stock is trading at double the net asset value, they are able to accrue double that. Oh, what happened? My camera just died out. I don't know why. I'm sorry. Hopefully you can still hear me. Let me see. Yeah, it looks like the audio is still working. So sorry, my camera just died. I'm going to try to restart it while I talk. But that is an example that hopefully explains what happens when they issue common stock, right? And so this, as I mentioned, is accretive if and only if, there we go, I think my camera's back. This is accretive if and only if the stock is actually trading above the net asset value of the Bitcoin in the balance sheet, right? Because if it's trading at exactly the same, right? If the stock was trading at what is it, $158.47, then they would issue new stock. They could buy Bitcoin, but the amount of Bitcoin per share stayed the same, right? Because yes, you were able to buy more Bitcoin, and so the overall company holds more. But you also issued more shares, and so every share represents. Every existing shareholder got diluted, and so now it's just basically the same amount of Bitcoin per share. And so this works for MicroStrategy as a tool as long as the stock stays trading well above the net asset value of the company. And I did want to call out, and I have a spreadsheet here I'm going to go through and talk about a few things. Let me exit out of this and go to my spreadsheet here, go to the tab, talk about the ATM issuance. ATM being the at-the-market facility that they have. This really only works up until a point, right? Because as they use this more and more, the spread narrows. And so I want to illustrate this real quick. And so I just went through this example where hopefully you can read this. Hopefully it's not too small. They just issued, so this is a starting point. Let me go through the full model. They currently have 471,107 Bitcoin on their balance sheet. They currently, divide that out by the share count of 288.37 million shares. That's 0.00163 Bitcoin per share. I looked at I assume the stock price stays flat at $327.50 and the Bitcoin price stays flat at $97,000. So those were all the numbers I used for this example. Now, if they issue 10 million, I kind of just walked through this one, so I'm going to breeze through it real quickly. After issuing 10 million new shares, their new net asset value per share is $164.13, and their new premium to the net asset value, right? This is called the MNAV, the multiplier to the net asset value, that they're valued at, drops to 1.995 from roughly 2.01 or 2.02 that it is right now. And so in doing that transaction, they actually dropped it. Now, what if they want to, continue doing this? If nothing changed, right? If the stock price stayed the same and the Bitcoin price stayed the same, they could keep issuing this and it would get closer and closer and closer to the actual net asset value. And so if they issued, I'm just going to ratchet up here, 100 million shares, you can see they get, 10 times as many proceeds. They'd buy 10 times as much Bitcoin. But then the net asset value per share doesn't grow, like 10x. It goes up to roughly $202 per share in US dollar terms, right? And so their new multiplier to NAV is 1.62. Now, what if they roughly doubled their share count, right? They're at 288 million shares right now. If they were able to do this with 250 million shares, they would acquire roughly double the amount of Bitcoin that they currently hold, right? Because their value is actually trading at double their NAV. And so they'd get 800 Bitcoin roughly. Their final share count would be, 538 million. But their new net asset value per share, it doesn't double, right? It goes up from $158 per share to $236, right? Because you're issuing quite a bit of new shares. And your new multiplier net asset value is, 1.38. And so you can issue a whole bunch of shares and it gets to ridiculous numbers, right? You could You could theoretically say, hey, let's issue 8 billion shares. Let's get $2.6 trillion of capital, which is absolutely ridiculous. But then in order for this to even work, you'd have to buy more Bitcoin than are ever going to be issued. So that doesn't work, obviously. But theoretically, even if it did, you still only get your net asset value up to and approaching what the current share price is, right? The net asset value per share still only gets up to $321 per share. And so you can't ever really exceed that. Now, in reality, and so I have a different model here that's a little bit more realistic. In reality, you would, what they do is they issue new shares, they ratchet up that net asset value per share, right? Because they get that positive BTC yield, and then they announce it. And because of that, folks re-rate the stock higher. And so in my prior example, I assumed that the stock price stayed flat, but in reality, the stock price does go up over time because they're able to announce and say, hey, we've yielded more Bitcoin per share because we were able to capture some of the spread. We issued some shares. Now we have even more Bitcoin per share. And so people re-rate the stock up. And now this is a model where if you look at it and you say, what if they, this is hopefully a little bit more realistic, that you could see how stock issuance can actually help over time even more. Let's say the Bitcoin price again starts at 97,000. They start at, their current share count, their current Bitcoin holdings. And let's say that their net asset value right now, they're trading at 2 multiplier net asset value. Now, what I did here was, let's say they go through a series of transactions where each time they issued 10% of their outstanding shares. So that's a pretty large dilution. Most companies, they issue 10% of the outstanding stock, and the stock is going to tank because that's a gigantic dilution for existing shareholders. MicroStrategy, however, is able to do something creative with those as long as the stock is trading above net asset value, as it has been. And so I modeled out, they get these proceeds, right? So in the first transaction here, they would get $9.1 billion. They'd buy some Bitcoin at, this price as I'm modeling it out, 97,000 for the first transaction. Now their new share count, obviously increases, new Bitcoin holdings, their new Bitcoin per share increases. And so their yield from that one transaction was 9%, but now their net asset value is higher. And I assume as a result, their share price would also get pushed higher if they, kept that same multiplier net asset value. Now, over time, I personally think that multiplier net asset value that they're priced at is going to go down over time. So I kind of ratcheted this down. I said, let's say after every time they dilute and they issue 10% of their outstanding shares, that multiplier net asset value goes down by 3%. And so we go from 2 to 1.94 to 1.88. You can see the deterioration or the decay of it after each transaction here. Sorry, I need a drink real quick. But each time, if they continue issuing these shares, and then I also looked at and I said, hey, what if the Bitcoin price actually appreciates, right? Because you can't ignore the fact that they're buying up a lot of Bitcoin. They're a large market participant. And so if they're able to ratchet this up over time because they're buying and just holding more of that Bitcoin, and again, Bitcoin price, hopefully if you're interested, or I assume most folks who are interested in MicroStrategy are bullish on Bitcoin. Maybe you're not, maybe you're bearish on Bitcoin, maybe you want to short MicroStrategy, I don't know. But I also assume just what I think is fairly conservative price appreciation for Bitcoin, where I assumed after every transaction, maybe they'd wait, at least for these prices, the Bitcoin could appreciate 4% after each one of these transactions. So again, this is just a total theoretical model. You can build your own similar model, put in all your own assumptions. But with that sort of appreciation over time, that also pushes up, sort of the US dollar value of their net assets. And over time, if they continue doing this, you can see that they would issue more shares, raise more proceeds. And over time, the Bitcoin yield per transaction does go down, but it doesn't go down nearly as much as what I showed in that prior model, where in this example, by the time they get to, 680 million shares outstanding, they could get all the way up to, 2 million Bitcoin that they hold, and Bitcoin per share of, almost double what they're at right now. And, MicroStrategy share price, if they had that, oh, sorry, I need another drink. I apologize for that. My throat is getting real scratchy. But they get to a final MNAV multiplier net asset value of 1.56, and final MicroStrategy share price of $627, right? So they can actually ratchet this up over time as they announce their Bitcoin purchases and they announce that positive Bitcoin yield. So that is how that really can help them over time. And that's basically what they've been doing. And again, this is only one tool. So let's go back and talk real quick about some of their other tools that they have. The convertible notes. And so these are very interesting because these are bonds, but they have effectively an embedded call option, right? And so they use the proceeds pretty far out of the money, right? That's how the convertible notes work. 50% usually, somewhere in that vicinity. And more recently, the very interesting thing is they've been able to issue this debt at a 0% interest rate, right? So they're not paying interest. These folks do still have the sort of downside protection, right? Where it's a bond. If at the end of this time period, it doesn't get converted, MicroStrategy is going to pay them back the principal. And so if they issue, a $1 billion bond, that person, unless MicroStrategy goes bankrupt, they can count on getting back at least $1 billion. Even if Bitcoin goes way, way down, as long as MicroStrategy is not bankrupt and they're still able to pay off, their debtors, the holder of those convertible notes is still going to at least get that $1 billion. Whereas if you just buy Bitcoin, you don't have that downside, right? And so this is the allure of, this is why people would actually want those convertible notes. On the flip side, for the MicroStrategy side, this is accretive to them. They are able to, this is their example from November of 2024. They were able to issue, their stock was trading at $433.80. Bitcoin was at 88,600. They were able to issue a note at 0% interest at a conversion price at about, I think it was a 55% premium, right? At $672.40 per share of MicroStrategy. So they sold $3 billion worth of these bonds. They were able to purchase 30,350 Bitcoin. I think those are my numbers that I was able to kind of calculate. And in 4 years, in 2029, there's going to, or I guess 5 years from when they issued these, there's going to be two outcomes, right? Either number one, if MicroStrategy is trading under $672.40 per share, MicroStrategy is going to have to pay them back, right? And so presumably, naively just assume that MicroStrategy is going to sell some Bitcoin. And so if Bitcoin is above $88,600, MicroStrategy is still going to actually, have gotten a net benefit to its common stockholders, right? Because they're going to have to sell some, but not all of Bitcoin that they were able to purchase when they actually issued these bonds. Now, if Bitcoin is below $88,600, then of course, yes, this was a bad transaction for MicroStrategy, and they're going to have to come up with they're going to have to make up the remainder some other way, right? Whether that's issuing more common stock and just diluting shareholders to pay back the bondholders, or something else, who knows. But on the flip side, if MicroStrategy is trading above $672.40 per 6 million shares, but if you divide this out, the amount of Bitcoin they purchased per new share that they would be issuing in 2029, they were able to bring in 0.068 Bitcoin per share, which is way more than their current holdings, right? That's astronomically more. And so that's it's just maybe I have that off by a bit, because that feels like it's a lot. Sorry, let me just divide this out real quick. Maybe I missed a zero in there. So they are going to issue, they issued $3 billion of bonds. And they are going to convert at $672.40 per share. That would be, 4.46 million new shares. Now, if they were able to purchase 30, where's that, 350 Bitcoin at the time that they issue the bonds, and if they then divide that out by that 4.46 million new shares, I missed a zero there. Sorry. So it's still a lot, because their current holdings are 0.00163 Bitcoin per share. This is 0.0068. So it's roughly, off the top of my head, about 4 times the Bitcoin per share that they're actually accruing per new share. And so this is a good tool for MicroStrategy, is the point, if they're able to convert this, right? And even if not, as long as Bitcoin is trading above $88,600, they're still able to capture some of this, right? Even if they have to sell some of the Bitcoin later on, the Bitcoin that they didn't have to sell, that's just free Bitcoin that now is on the balance sheet forever, that is sort of owned or claimed now by the common stockholders. So that is kind of how the convertible notes work. And now they have their most recent tool that they've actually started using. That's the preferred stock. And this is, just so you know, this is trading at the, it's trading on the, NASDAQ, I assume. I guess I'm not sure. I don't remember. NASDAQ, New York Stock Exchange, one of the two probably, under the ticker STRK. This, on Friday, it closed at $86.40. Now, this preferred stock pays out $8 per year, forever. Now, one thing I would note, if I recall correctly, when I was putting together these slides, I kind of did this by memory, but I'm pretty sure that there's some fine print that says they don't have to pay you in dollars. They can actually pay you in MicroStrategy shares. They can pay in kind there, and give you common stock in lieu of cash. But so just be aware. But now this is not just strictly, playing perpetual, we're paying out $8 per year. There's also this convertible feature to it, which is each share of STRK is convertible to 1/10 of a share of MicroStrategy. There might be a $1,000 floor for the common stock. I'm actually not entirely sure. I skimmed through the actual, the very, very long document for the legal document that goes through what the convertible shares actually have. I didn't notice it there talking about an actual floor price, but for the conversion. But then when you go in their presentation, sorry, that's not the presentation. If you go to the presentation, they do say that there's a floor price, and I can't tell if they're just they say convertible into 1/10 of a share of MSTR stock at a conversion price of 1,000, and so it's not obvious to me that if that's truly the case. I mean, from here it suggests it. From reading through the actual sort of the legal document, the form of the preferred stock, I didn't see in there, and maybe I missed it, and so that's why I'm calling it out here. So for now, we can assume it. I don't think you would really want to convert it until MicroStrategy is at least in the $800, $900 range. So 1,000 is pretty reasonable, where like most people probably wouldn't want to convert at that point anyways. But just talking about that, so it might have a $1,000 floor, just to let you know. Now, this is, for the most part, not callable, meaning the company can't force you to convert, except under a couple of circumstances that are, they are possible, but it's not likely to happen anytime soon, let's say, if ever. And the one thing, just to call out how this affects MicroStrategy itself, they're going to use the proceeds from this to buy Bitcoin. And so that's a positive for them. But similar to issuing bonds, right, they have this future obligation to pay out those either that cash, the $8 per year per share. And so that, again, it could be paid in common stock, but if you're with their KPI of Bitcoin yield, right, issuing common stock is basically just as bad as having to pay back cash, because both of those are going to somehow reduce the Bitcoin yield that you can actually just get if you didn't have to do that, right? Because if you're issuing shares, that's increasing your denominator, so your Bitcoin yield is going down over time from this transaction. And so, or from the sort of each year that you have to pay out the $8, because obviously it goes up when you issue the preferred stock, because they're getting in that $80 of cash per share when they issued it. So, for example, or just to walk through the numbers, I would say they did issue 7.3 million preferred shares. They got net proceeds of $563.4 million. So they're going to go out and presumably, right now or very recently or in the near future, are buying Bitcoin with that. But in return, they are going to have to pay out every year to the stockholders. Now, how do you value this? The classical way to value, if you forget about the conversion, the classical way to value this is, it's called a perpetuity, right? And so you value this as the annual premium that you're getting and divide that by your discount rate, and then you just get your valuation. So if this was super, super simple, if it was a 10% discount rate, you're getting $8 per year, $8 divided by 10%, gets you to, you know, an $80 valuation. I think that's roughly how they got to the valuation when they are actually issuing these, as they issued them last week. The current trading price of $86.40 implies a $9.26% discount rate. But then you have to ask yourself, what about that conversion? Now the thing is, if you value just if you just say, hey, I'm happy to accept a 10% discount rate, so I will value the preferred stock even if I forget about the conversion at $80 per share of STRK. Then you have to say, well, it doesn't make sense if that remains true forever, right? It's not like it stops paying out after 5 years or 10 years. It will pay out forever and ever and ever, right? So the value of that doesn't change. If you're always willing to accept a 10% discount rate, it's true today that you would value it at $80. It's true 10 years from now that you would still value it 10 years from now at $80 at that point in time, because they're still going to pay you out $8 per year every year into perpetuity. So if you can value it and say there's sort of this floor price for my valuation of $80, it's convertible into 1/10 of a share of MicroStrategy, but 1/10 of a share of MicroStrategy is, you know, at the present worth less than $80, right? So it's effectively not really worth anything to you at the moment, right? In the future, maybe MicroStrategy will be worth more, and so there's some optionality there where maybe it will grow to where MicroStrategy is, the common stock is worth more than $800 per share, at which point you might say, hey, this is getting attractive. I would like to convert. And so for me, I sort of value this as a terminal valuation. So I have a super, super rough spreadsheet here. You can kind of think about this yourself. If we look at, I believe it's this tab here. Yeah, so let me start this off and put this, MSTR at 327.50, because that's, I think, the closing price. If MSTR stays flat forever, and I'm using 8% discount rate, so let's move this back up to 10. I was just playing around with some numbers earlier. 10% discount rate, your theoretical perpetuity value, right, the value of your preferred stock as a perpetuity, is just $80 per share. The net present value of 1/10 of a share of MicroStrategy is basically always less, right? And so you can look at this. What if I converted it after collecting $8 for 1 year, after 2 years, 3 years, 4 years, right? Because you can wait and collect the $8 per year and then convert at some point in time in the future. And so if you're looking at what is the current value, right? Because you could look at this alternatively and say, well, what if I waited 10 years, collect $80, and then I convert? In that 10th year, I would get not just $8, I would get $8 plus 1/10 of the value of MicroStrategy. Again, if you ignore any floor price in the value of MicroStrategy that might need to be there for you to convert, then you could say that at that point, that's sort of like your terminal valuation, where that's where you're getting a larger chunk of cash in that 1 year. But the problem is, you have to use that same discount rate, right? Because if you wait 10 years, you're not getting that, $32 worth of value from the conversion until 10 years from now. And so that's not worth $32 today. It's $32 10 years from now. So it's worth even less to today. And so that's where, if you want to value this yourself, you have to sort of forecast, what do I think MicroStrategy stock is going to do? So let's say in 5 years, you think MicroStrategy is going to go up and it's going to be worth $1,500. I'm just going to put this in here for now. So you can see, okay, well, if I think it's going to be worth $1,500 in 5 years or 4 years from now, I guess I put it in, that means that even though today I can't actually get, the $150 of value from converting my preferred into MicroStrategy stock, because MicroStrategy is not trading at $1,500 yet. It's going to trade at that price in 4 years from now. But what I can do is wait between now and 4 years from now, collect $8 per year, and so that is worth something, right? That $32, although you're going to discount some of that stuff because some of it's next year and the year after and the year after. But then 4 years from now, I can actually collect $150 worth of value, because I can convert into 1/10 of a share of MicroStrategy, and then sell that and capture $150. And so the net present value of that share of MicroStrategy, or that 1/10 of share of MicroStrategy 4 years from now, is $102.45 if you discount that back at that 10%. If you also add in the cash flows you're going to get from the $8 per year payment, you can say, well, maybe the current net present value of that, if you convert at the end of year 4 at a $1,500 MSTR price, is actually worth to me $127.81. And so, again, if you viewed things that way, you might say, well, buying the STRK, the strike shares at less than $127.81 today is a good value. That is the least way to think about that. And again, I'm not stating that those are the numbers you should use. That's the model that I would use to think about this as you are sort of forming your own views and deciding whether or not you want to buy this. But I think because of the financial structure that MicroStrategy has, one thing that I would be cautious about is making assumptions about the future value of MicroStrategy stock, assuming I would avoid making too many assumptions about the future share count, right? You can look at what their operations are going to be, and you have to really model things out and be really, really careful as they go through these transactions. What is the final actual value per share, right? Because lots of these transactions that they're doing have this component where there's both some accretion that happens, but they also issue more shares, right? And so even if they can accrete more and more and more value per share, but as their share count grows and grows and grows, the likelihood of it growing above, of it doubling in value per share and tripling in value per share without appreciation in Bitcoin, that's the major asterisk, which I'll talk about in a second. Without Bitcoin appreciating a lot, it's going to be really hard for them to ratchet up, the Bitcoin per share with just these tools that I talked about today. Now, on the flip side, if you think Bitcoin, MicroStrategy could go to $1,500 tomorrow if Bitcoin went up, 400% or 500% tomorrow, which is possible. Nothing prevents that. I'm not saying that's likely at all. It's not my view, but it's possible that Bitcoin could go up very, very quickly. And so if that happens, the value of MicroStrategy very likely is going to go up very, very quickly. And so that's another way that you could view this, where you could say, even if they can't increase their Bitcoin per share particularly fast in order to actually, get to that $1,000 per share of MicroStrategy, the appreciation in Bitcoin itself is going to be a large driver, or can be a very large driver very quickly to get to that point. Hopefully that made sense. If you have a question, just leave in the comments. I can try to explain it in a little bit better terms. All right, so getting to how do I think about the valuation for MicroStrategy itself now that they have all these tools. I mean, obviously they're just going to continue doing these over time, but the real question is, I think I would say because the size of the transactions and what they're able to accrue with these Bitcoin treasury operations is sort of at a magnitude of scale that is higher than their operating business and is growing over time, whereas their operating business, frankly, is not growing. Not growing nearly as fast as their Bitcoin treasury operations. I do think that valuing MicroStrategy off of their balance sheet makes sense, and I think the model of a multiple of their net asset value also makes sense. But the question is what multiple makes sense, right? Because in 2024 they were able to get a 74.3% Bitcoin yield. I don't think that's sustainable. I would be really surprised if there's very many serious analysts who think that that's sustainable. Because in doing that, they actually increased their Bitcoin that they held by 236%, right? So the yield per share was 74.3%, but their overall, increase in Bitcoin holdings was, if I calculated it correctly, 236%. And so if they were to try to increase the Bitcoin holdings again by 236%, that would be that would be astronomical, right? They'd go from, roughly what did I say, 2.2% of the overall Bitcoin outstanding to something like 6% or 7%. That'd be a massive increase. And so that starts, at some point you hit the limitations on how much Bitcoin is out there. And then you have to continually compound that over time if you want, to continue on having this, multiple on your net asset value that is, much higher than, a 1.0. The company itself is even guided in 2025 for a 15% Bitcoin yield. And so I sort of have two ways to think about this. Number one is the net present value of their future Bitcoin. And so I kind of think about this in terms of like, okay, let's just add it up. What do I think their yield is going to be year after year after year? Because I do think that that's going to go down. And I looked at this as, this would be the column F in my model here. So they start out at 1, just, 1x of their net asset value. This is the net asset value versus today, basically, right? So if today they have 471,000 Bitcoin, this represents 471,000 Bitcoin. When this goes to 1.15 or 1.32, it's just a multiple on top of that. So every year, if they're able to yield 15%, then in the next year, if year one they yield 15%, and the next year they have 1.15 of their original Bitcoin when I started this model. If they again do 15% the next year, the following year, then they have a 1.32 amount of Bitcoin or amount of net assets relative to their original assets when I started this model. And so I sort of looked and said, what if they do 15% for the next 3 years, then 12% for 3 years, and 10%, then 9%, then 8%, 7%, 6%, and sort of ratcheting this down until sort of they get to a 3% terminal Bitcoin yield until the end of 50 years. Which I think even still is probably a little unrealistic, right? Because if I go through the math here, that gets them to 14.25 of their final net asset value, and times 471, was it 107 Bitcoin? That gets them to 6.7 million Bitcoins, almost about 1/3 of all Bitcoins ever. They'll be issued in 50 years from now, and I mean that's not impossible. If MicroStrategy is able to continually get a yield on their Bitcoin, but I guess. Maybe I was saying this to spell out and say, I think this is actually a pretty rosy view of the future. Now, you still have to have a discount rate on this, right? Because getting Bitcoin next year and the year after that and the year after that is not the same as having Bitcoin today. Just the same as you would discount US dollars. If cash flows in the future are going to come in year 5, year 6, year 7, you have to discount those cash flows back to today. So if I use a discount rate of, I just put in 12% here, that would get you to a net present value MNAV of 2.79, which is absolutely massive. And again, why I think that I wouldn't ever think that it makes sense for the stock to trade any higher than that MNAV ever, because I think this is a pretty rosy view of things. Now, what if I go to something that I think is more realistic, and let's say over time, once they get to over 1.5 million Bitcoin, somewhere around here, this yield really drops off. And let's say it goes to, I think it could drop off even sooner, but let's be, let's be bullish and say that they're able to keep this up for about 10 years, but then it drops off to, 5% and 4%, 3. And then they get to basically this point where they've reached the, this point of market saturation. And the 2.5%, sorry, that's rounded, and then it goes, 2%. Let's say 2% is more like a realistic final year yield for the company. I guess even with this, again, this is a model, so even with this, it gets you down to a 2.42% MNAV. But this is also saying that you're accepting a 12% discount rate. I think a lot of folks who are investing in MicroStrategy, given the the risk associated with this, because they are levering things up, they are relying on Bitcoin price going up over time and effectively monotonically going up every 3 or 4 year period because their debt relies on that. If you said, I'm going to discount this at 15%, now all of a sudden your MNAV goes down. But this does help you explain why it's trading on MNAV of 2 or so today. And so I think it's, this is why it's trading at that point, and people are kind of valuing it roughly around fair value. If you want to be, let's say, more pessimistic and say 15% this year, 12% next year, right? Because I think even 15% is pretty optimistic, or it could be optimistic, right? Maybe I'm way off here. Maybe supply of Bitcoins really goes down in terms of what's available over time. And this goes down 10%, 10%, 9%, 9%, 9%, 9%, 8%, 8%. You start to get the MNAVs that are lower and lower and lower. But hopefully this helps you understand how you'd model it out. If you want to start looking at higher discount rates, put in a 20% discount rate. Cool. Now this gets it down to a 1.7 net asset value, or multiple net asset value. But the real trick here is some of those tools only work, right? So especially the stock issuance, which is what they used, I think, in order to capture most of what they did in 2024 for their Bitcoin yield. They only work as long as people believe that they're going to be able to yield in the future a higher amount, and that MNAV actually is at 2 or above, right? If the MNAV starts to go down because people don't think they're going to be able to yield as much, it's a bit of a feedback loop, because the stock isn't trading at quite a premium, they can't actually yield as much. And that has knock-on effects for the convertible notes, right? Because the convertible notes are priced off of the pricing of the common stock. And so again, that sort of compresses things and can get even more and more of a, lower potential, let me say, for the company to actually generate, massive Bitcoin yields. And so I think that it is appropriate to have, pretty high discount rates. Again, maybe you would want to use a 25% discount rate for the company, and you say, well, maybe the fair value is 1.57. But again, it's sort of a bit of a feedback loop where the lower the market believes that the lower multiple the market assigns to it based on their net asset value, the less they can actually use some of these tools. And so something to keep in mind, it is what I think is a bit of a risk for the company. There's a second method here where you could say, well, what yield do they get? And then what multiple would I put on that? I think I call this out only because some folks advocate for this. And this would be something like saying, hey, cool, this year they're getting 15% yield. And let me treat that 50% yield that they get as roughly, 1 year's worth of earnings, and then assign a multiple of 30x that I do like for a price to earnings. It's sort of a proxy for earnings, right? That 15% that they yield. I don't personally like that. And the reason why is because I do think that the Bitcoin yield per year is going to go down and down and down over time. So what I've done here, this model is closer, it's not exactly the same, but it's closer to a discounted cash flow valuation, whereas, which I think is a much more, it's a much better tool to use if their yield does actually change drastically, as I think that it will, because I think it's going to drop, year after year as it gets harder and harder to actually achieve a yield on the Bitcoin that they have. And so that's why I personally am very leery of using this method, and mainly because, you have another issue, which is what price to earnings multiple is appropriate, right? If they yield 15% of their net asset value this year, and we call that, I don't know, what's 15% of their net asset value? Somewhere in the $5 billion range, maybe. Let's just hypothetically say it was $5 billion. What multiple do you give to that? Because they're not going to be, if you think that's going to actually drop over time as it gets harder and harder for them to yield the same amount, 30 doesn't seem appropriate. What about 20? What about 10? What about 5? You have to come up with that, and that's not easy. And I think that the best way to come up with that is to do some sort of a model similar to what I have right here. So that's kind of how I view things. Anyways, looking at the chat, I don't see anything on the chat, and that was the end of my prepared materials. So hopefully you found that useful or interesting. Let me know what you think in the comments below. I am also on X if you want to talk to me there. I'm at Dustin's Dollars. Feel free to do so. If you watched this far, I really appreciate it. And thank you very much for spending some time with me. Hope you enjoyed it. Have a good one.